Today I'll be showing you guys an extremely easy option strategy that you can do on a stock that you think is going to drop. A couple days ago I showed you guys the Strat strategy, which is for a stock that you are bullish on, that you think will rise. Worst comes to worst, if the stock does drop, you will make money that way as well. This is just the opposite. So this one is for a bullish or a bearish strategy, my fault. And so our assumed position with this is we want the stock to start dropping, but if the stock does continue to rise, we'll make the money that way. As long as the stock doesn't trade flat, then we will be good. So I just set this up with Tesla, and I'm going to show you guys an extremely expensive one that can make you a ton of money, like thousands and thousands of dollars, and I'm going to show you guys a way cheaper one that's going to be under $100 that could still make you a couple $100. So we'll come over here to trade Tesla options. So what you want to do is we're going to buy one call and two puts. We want to buy these at the closest as the share prices we can get. So right now Tesla is at $770. So obviously the closest is going to be right there. If Tesla was at $766, then obviously we're going to choose this one right here because that's the closest strike price that we could choose. So for this one, obviously we're going to go with the 770 point. So we're going to buy a call right here. And you can see that's already going to run you $1,600. This is multiplied by 100. And then we're going to buy two puts at the same spot. So right at there, the 770 strike price again. Now we're looking at 4,960. And so what you're going to see so far is you'll see a long straddle. The last piece we got to do is we got to buy two puts. And to do that, we're going to click on this arrow right here. And before we continue, I would make sure to note the risks that can come with options trading, such as early assignment and things of that nature. But with this one, we are only buying pieces of this. As you can see right here, it says buy and buy. We aren't selling. So early assignment is really only a problem when you're selling options. So we don't have to worry about that in this strategy. But with other ones, if any piece of the strategy involves that you sell something, I would be cautious of that. And you can look up videos on how to deal with that and how to associate with that. But for this one, we obviously are not selling anything, so we don't have to worry about that with this strategy. But we're going to come over here to the puts. We're going to click on this, and we're going to change this to 2. So now you're going to see it change a little bit. And so like I said, it's pretty expensive. Your max loss is $8,195. It's just going to be a little bit different. But right here it says the max cost is $8,320 because like I said, it's times 100. But if you start to see, let's say we think Tesla's going to drop. Tesla moves tens of dozens of dollars in a day. So let's say we think Tesla's going to drop, let's say $70. It falls to $700 right here. We're up about $6,000. And so you can see, how powerful that is. Like I said, it's very expensive. And by the way, we chose the expiration date a week out from today. That's just by default. If you want more time for your stock to move, then pick a further out date, but it will get more expensive. So you want to choose a nice middle ground where you got about a week, maybe 10 days to give that stock to get that spot, and then hopefully stop there. Because if it gets to the spot and then you have too long of a date away, the stock can move off of that spot. So yeah, I forgot to mention that we're going to choose the expiration date about 7 to 10 days away. This just chose it by default because I'm recording this on the 8th. But yes, that's the very expensive strategy that can make you tens of thousands of dollars if it goes well for you. But you can also lose about $8,000. So for the cheaper strategy, we're going to come to AT&T. We're going to set the exact same thing up. We're going to come over here to trade AT&T options. Let's say that we heard some news about AT&T. We think that one's going to drop. So yet again, we're going to buy one call closest to the share price right here. 21 is the closest to 2076. Now we're going to buy two puts. Click on the same spot. Again, it should say long straddle so far. Click on the drop down arrow, click custom, find the put, and change this to 2. So there we go. Now here our max loss is only $90, which sounds a lot better than $8,300 or whatever it was. And like I said, let's see, AT&T is at 2076 right now. So let's say it drops, a solid $1. Not even, a solid 74 cents. We're up $107. Obviously, AT&T doesn't move as much as Tesla, so $1 is a decent movement. But yet again, we have a week to do that. And so you can see how this will work out. We're going to come over here to Option Strat though to visualize this a little bit better. I always recommend you go to Option Strat to visualize your trades a little bit better because obviously only Robinhood shows us what it's going to look like on the expiration date. but we want to see what it looks like a couple days beforehand in case we want to close out earlier. So come over here to build and come down here to strip. And so we're going to type in, we'll do AT&T because I assume most of us will not be buying the Tesla ones, so we'll show this with AT&T. And all we do is just copy this information right here over to option strat. First things first, let's make sure we got the correct expiration date, the 15th, yes. And then we're going to buy our $21. Okay, it's already there. It already is fully set up for us. So come down here and we're going to move this chart range a little bit so we can see. So as you can see, you'll make profits on both sides, but we're going to skew it out a little bit. So preferably the stock is going to drop. That's like I said, it's a bearish stock strategy. So when AT&T starts to drop, you'll start to see the profits that you get for the certain even times of the days of the week. So I think that's a great way to visualize it. We could set up the Tesla one, but I don't think that that's really needed right now because it's pretty similar. You just input the same exact things. Actually, let's see what Tesla looks like. So I think I remember I chose 770. Or was it 750? It's interesting. I thought I remember it being 770. So yeah, you can just see the exact prices of the days of the week. Obviously, the max loss here is about $8,185, which it said, which is exactly what Robinhood said. So we're pretty consistent with the prices. But I like this one a lot better because you can visualize it way better. But other than that, if you're curious about other option strategies, be sure to check out my channel. My most recent video, besides this one, is about the Strat strategy, which is a bullish strategy, which is just the opposite of what I just showed you. So if you want to see something about that one, click on that video. If you have any questions, be sure to comment them down below, and I'll be sure to answer those. And yeah, thank you for watching.